Well, thanks so much for tuning into this conversation of Talking Point. The talking point today is the exceptional performance from HCL Technologies in their quarter three numbers. They've beaten estimates on most counts, if not all. They've beaten the estimates on what the guidance could be for quarter four as well. Needless to say, they've beaten their own, or they have surpassed their own earlier guidance for quarter four as well. The leadership team joins me to talk about the quarter gone by and the outlook ahead, maybe not just for the quarter, but for the year. CVK and Prateek, gentlemen, congratulations on a good show. Thanks so much for joining in. Hope all is safe, both of you.
Yes, thank you, Neeraj. Hope you're doing well and staying safe.
Yeah, touch wood. Thanks, Prateek. Thanks, CVK. CVK, let's start off with that. At the end of the second quarter, the guidance that you gave for quarter three and quarter four was strong, but it looks modest in comparison to what you've clocked in. What enabled such a strong quarter three?
I think two major highlights of the quarter three is our performance in the Mode 2 business, which is digital and cloud business, which is what we had incubated in a strong way about 4 years back. This has grown 10% quarter on quarter and 25% year on year. And as you would have heard, the demand for digital transformation in our existing customers and new clients, cloud migration, augmenting security, Internet of Things, all of these programs are what is really driving the growth in the Mode 2 services. That's number one. Number two is our products and platform, which has really hit the ball out of the park. It has grown 8% quarter on quarter and about 9% year on year. We had some exceptional booking, almost 3 times what it was in the previous year, December quarter, because of the product functionalities that we launched in some of the products that we had acquired. They're finding huge traction in the market, be it commerce, big fakes, application security, Unica, low code, no code platform. All of this is finding great traction. And the mission critical nature of the products is what is making it more sticky and clients adoption increasing. In fact, we signed almost 700 new customers for the software product licenses in the last quarter. So this business is on a roll, as we can see in the last 2 quarters. And of course, this was seasonally a strong quarter. Next quarter, it will come down and you will see a negative growth. But overall trend is very, very strong in this business.
Just a follow-up, CVK, and I'll come to that milestone that you guys have as a company achieved as well. I'm sure it means quite a bit. But but I'll come to that in a bit. Just first, a quick follow-up. Has the strength of the business or the response from the customers, both existing or the new ones, for any of your verticals, taken you by surprise? Or were you guys anyways of the belief that with everybody wanting to be digital first companies now, as would be second nature to almost every large organization, that this was largely anticipated? It was not a question of if, but a question of when.
Yeah, I think it is whatever we had expected. Some verticals are going to start spending right away because pandemic really created a lot more demand in some verticals. And some verticals like manufacturing, we knew it is going to take some time, especially the aero segment, aviation segment was going to take time, which probably is going to take another few quarters. Manufacturing overall, maybe another couple of quarters. Well, this quarter we have done well, but year-on-year perspective, it is still on the negative territory. We believe it will take a couple of more quarters. Other than that, I think it's pretty much on the expected lines, Neeraj.
Okay. Prateek, let's bring you in. And as you said, the zero on the right-hand side, it's a big thing. I saw CVK's statement as well after the quote that he's delighted to know that now you are in that sense a different club, so to say. But tell us about your perspective on the quarter, because one thing that has certainly stood out amongst many others is the kind of performance despite the wage hikes for a large proportion of your employee populace. You've done exceptionally well on the operational front. What's led to this?
Thanks, Neeraj, and it's extremely humbling and gratifying to add the 10th zero to the dollar number. and be a $10 billion revenue top line over the last 12 months. That has been this calendar year 2020 unique in many respects. This is one more respect which is unique, where HCL enters the $10 billion club. To your question on the operational resilience and operational margins, etc., it's been a phenomenal year as well. 27.5% EBITDA margins as per IFRS and AS metrics. And even for the quarter, the December quarter, it was at 29.1%. And 29.1% after taking into account for the largest part of our population, we gave out the increments. It amounted to about 50 basis points for this quarter. There will be more coming in the next quarter, which is the more senior population will be getting it in the next quarter. So it's been driven by a whole lot of metrics, efficiencies, both on the offshoring of the business, more growth coming in the India and the lower cost geographies, as well as SG&A leverage driven by the good momentum on the top line, as well as other operational efficiency improvements.
Yeah. So, but are you guys being modest for quarter four, or is this a bit of a new normal because you've guided to a number which is lower than what you've clocked in? Is it a factor of the salaries coming in for the senior employees and seasonal factors which might lead to quarter four operational performance looking the way you've guided to, or do you believe that you got to get into the mode wherein you under-promise and over-deliver?
So, Neeraj, at the end of the last quarter, we had guided to a EBIT margin of 20 to 21%.
Yes.
Now, given the good performance in the 3 quarters year to date, and looking at the range for the next quarter, given that there are these salary increments planned and some investments coming for the large pipeline that we have and the good bookings that we expect. So we have baked in a range for the next quarter, and we have increased the 20 to 21%. The 21%, which was the higher end of that range, is now the lower end of the range for the full year. And now the range is at 21 to 21.5.
Okay. Yeah, so I got that. I was just being, I think a lot of your investors would be greedy looking at quarter three, that why not extrapolate it to quarter four in the year ahead. But nevertheless, CVK, coming on 2 factors. One of them is deal wins. I was reading a report which had mapped all the key deal wins for IT companies. They somehow must have missed some of the ones that you've done, because you, at the end of quarter 2, I think you did 15 transformational. You've probably done 13, if I'm not wrong, at the end of quarter 3 or in quarter 3. Tell us a bit about deal wins, conversions as they are happening, and how confident are you about pipeline? The report, I think, day before yesterday suggested that the quantum of opportunities are only opening up for IT outsourcers.
Yes, I think, we won 13 transformational deals in the last quarter. It's up about 13%. The total deal wins is about 13% higher than what it was in the same time in the last year. We think there is a very good momentum, strong pipeline is there, and I think our bookings will only accelerate. And maybe we have not announced the deals because some of that requires client permissions, but overall 13 transformational deals, all of that is listed in our investor release. And what is even more heartening is it's only going to accelerate. The deal booking momentum is only going to accelerate from here.
Yeah. So CVK, can I ask you how, as you perch right now, how do you see 2021? We are in a with COVID or a post-COVID world, as you may see it. How does it look? The next 12 months, how do they look?
Yeah, I think that the most fundamental thing is tech intensity is continuing to increase. Every industry is being techified. You may call it fintech or health tech or insurtech, right? Its intensity is increasing, and this means obviously there is more cloud adoption. There's more digital transformation. and to find the funding for those programs, they optimize the costs on some of the run the business kind of activities. And maybe that's also one more trigger for a little more outsourcing, where we bring in more automation and things like that. So I think this is the fundamental reason the overall pipeline and the overall momentum in the industry is strong, and we are just riding the momentum at this time.
Okay, last couple of questions before we wrap this. Prateek, to you. What about inorganic growth? I mean, we typically used to talk about that. I believe this year, correct me if I'm wrong, but you guys haven't been gung-ho in terms of going out and acquiring names. Could that change in 2021?
Yeah, Neeraj. So couple of factors there. So organic growth for the quarter is virtually the same. There's no, I mean, whatever small little acquisition of that Cisco SON that we did was offset by something else, the India decline that we have been doing over some time in the SI business in India, systems integration part. So there was no real impact of inorganic in this quarter. At an overall level, I think our largest investments over the last 4 or 5 years have been on the product side. And as you heard, the product side is now kind of complete. It is a $1.3 billion revenue stream running through the veins, and is doing very well, as CVK already talked about. So, it is now in that sense complete. We would always look for other good opportunities, maybe in mode 2, maybe in some geographical areas. But I think in that sense, we are where we wanted to be, and therefore not such large ones in the last, say, couple of years.
Okay, CVK, final question to you. Would that change? And I'm just trying to second guess whether you would believe that there will be a need to do that in order to accelerate growth, or just that the organic growth will look so strong because of this whole quest for all companies to be digital first, that you would be a lot more choosy than what you otherwise would have been.
No, Neeraj, always our inorganic strategy was driven around some strategic themes, either geography or mode 2, or in the third dimension is the products. So I think it will continue to be in these dimensions: products, digital or mode 2, and in some geographies. And it's all about getting the right opportunities. But we are pretty busy executing the momentum in the market, and the organic growth vectors look very promising. So to that extent, you have to balance your bandwidth and kind of do the right thing at this point in time.
Okay. Jam, I'd love to talk more, but I understand you have limited time. But thank you so much for throwing light upon the quarter gone by and the outlook ahead. And congratulations on nomenclature terms, a new size. I'm sure it's a big milestone achievement. So congrats on that as well.
Yeah. Thank you, Neeraj.
Thank you. And look forward to talk to you next quarter, maybe in person.
Yes.
Hopefully.
Bye.
Yes.